Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Brien Lundin, who is the CEO of the New Orleans Investment Conference and Gold Newsletter. And so be sure to click the link in the description below that's pinned in the comments to the New Orleans Investment Conference so that you can book your seats. And we're actually going to talk with Brien about the conference here shortly because he's bringing on some amazing guests and everything. So you do not want to miss out on this. And even if you can't be there in person, there is a virtual option. So be sure to click that link. And Brien, I want to talk through markets and everything with you. Obviously, I am excited to be at New Orleans this year, and I'm excited to get one of my favorite things, which is some Louisiana hot sauce. I'm from Oklahoma City, man, and that Louisiana hot sauce that is my favorite. And so I'm excited to get some of that New Orleans culture and also learn more about the gold markets and the economy. So tell us a little more about the sentiment that you're seeing on the ground with folks and the conference this year, as well as just overall. I mean, you write a newsletter. I'm sure you get many inquiries and such. And so just want to get your perspective on the front lines.
Absolutely, Darrell. Great. Looking forward to having you again this year. And you'll notice that the hot sauce will be sitting on the buffet table right in front of the gumbo. So
Yes.
Use it liberally, but try to get it before I get to it because there might not be any left after me. Yeah, man, these markets, huh? It brings up the old Mencken saying, be careful what you ask for. You might just get it good and hard. And we are getting it good and hard right now. It is kind of scary, in this sector, you're stressed and worried when there's a bear market, and you're stressed and worried when there's a rollicking bull market. So, it's a hell of a thing we've chosen to focus on here in metals and mining. But I think that we are being proven correct in everything we've been saying for months, for years, for even decades. In many cases, it's coming to fruition right in front of us, and people are wondering where in the world is all this buying coming from. It's not just it's not just buying for a hedge. This is momentum buying. It's buying at peaks. It's driving the gold price ever higher. Silver is now following in footsteps in leveraging as it should. The mining stocks are playing catch up. They're still undervalued, even though they've doubled and tripled in many cases. So it is interesting. It really is. I have some suspicions as to what's going on. And I think it's pointing toward not just a central bank actor in the market that we have suspected or know about. Not just China probably buying much more than they're talking about or that we suspect. I think this kind of a move and the timing of this move points toward Uncle Sam actually getting involved and the U.S. actually buying gold. I don't know where else the buying could be coming at this point and at this level, these price levels and to this degree. So, and off market too. I mean, we're not really seeing it in the typical data that we get, the gold flow data that we get. So, it's interesting for sure, and I think it's a compelling story that's playing out right in front of our eyes.
Yeah, so I mean, if Uncle Sam starts buying gold, the prices are going to go crazy, measured in dollars. So we have seen the U.S. government taking stakes in some of these mining companies, mostly for strategic minerals and metals and such. And so I think if the U.S. government was to take stakes in mining companies, that would just be parabolic moves for the gold sector. And so just thinking about that, there's been a lot of talk about gold revaluation and such. And obviously, gold is hitting a lot of headlines. It's hard to ignore. Obviously, today, futures are sitting at over $4,200 an ounce. It's moved up significantly over the past few months and such, even after consolidating for a little while during the summer. And so Do you think this gold revaluation thing has some credibility to it? What are your thoughts there?
Yeah, I think that there's an end game to this trend that we've been watching for or experiencing for about 45 years since Volcker started to lower rates from above 20% after he killed off inflation of the 1970s. Um, it's been a steady stair step down, and the central bank and central banks in general have always had the same prescription. They've always eased monetary policy, lowered rates in response to every recession, and have not been able to raise them, normalize them again after they've lowered rates. So the markets have become addicted to ever easier money. That has, as a corollary, built up or encouraged the built up of ever greater debts along the way, to the point where the debt load is now unmanageable. So there is an end game that this points to, and that is the reattachment of gold to the dollar and to other fiat currencies to restore credibility in those currencies. I don't think we have reached the point yet where that is necessary, or that the powers that be will allow that to happen, because the currencies still have, by and large, some credibility left. So I don't think they would be that desperate to do that right now. I think, however, in the U.S., they are pursuing one or two or both policies, one being the revaluation of the U.S. gold reserves, because they went radio silent on that shortly after it was brought up earlier in this year, around January, February. Coincidentally, in January and February of this year, they were talking a lot about auditing Fort Knox to see if the gold was really there. Then they shut up about it. As soon as they shut up about it, the price of gold took off. So coincidence, perhaps, but maybe not. So I think that they will pursue, one, a revaluation of the U.S. gold reserves, which is much more impactful to the Fed balance sheet at $4,000 gold or $5,000 gold than it is at $2,000 or $1,000 or $2,500 gold when they first started talking about it. The other thing is they may be looking to legalize gold as money, not necessarily attach it to the dollar on a set exchange rate, but just legalize it as currency, as legal tender, without any taxation, so American investors and savers can at least protect themselves by owning gold. That's something I'm starting to promote myself, or trying to in the early stages of trying to do that. But I think that would be a very easy step for them to do. Either one or both would have dramatic implications for the gold price.
Yeah, for sure. So I'm kind of thinking about, as the price of gold continues to increase, or the dollar falling against gold, and many of these companies are starting to get flush with cash and such. And I'm thinking about, even in the recent election, you had the crypto community come out hard with lobbying, and even with huge amounts of capital sitting on the sidelines looking to support whichever candidate. Like with gold mining, I mean, restrictions on mining and such have been eased. Policy has been eased, because it was just very hard for companies to get licensing and all of that in the mining sector as a whole. But could you see, like, there be gold companies like just really coming forward? I'm sure they probably are already, but the crypto news had got a lot of attention when they had millions of dollars sitting on the side looking to support candidates. And so I'm kind of wondering if that's possible for gold companies to come alongside and talk to the government, like, hey, we need sound money.
Yeah, possibly. I think that they wouldn't be pursuing sound money so much. Interestingly, that is, you don't find that being a common view in the gold mining industry.
Mm-hmm.
If it were, then they would pay dividends in gold. They would hold their cash in gold or silver. Not many companies do that. Silvercrest did for a while, but they got bought out, and so there's not a big movement, I guess, for that. But there's no doubt that they will be lobbying and encouraging relaxation of regulations and permitting times and the like. In the first Trump administration, there was the edict that permitting, there's a timeline, a clock on permitting. It had to be done within, or not done, but resolved within 2 years. And that dramatically accelerated development of projects in the U.S. So I think we're going to get more encouragement like that. I don't know that gold will attract, or gold projects will attract U.S. investment like the critical minerals have and will. I doubt it will, but I think there will be a lot of encouragement from this administration toward mining and development of projects and streamlining lowering the hurdles, the many permitting and regulatory hurdles now facing mining projects. Copper is one that I think you're going to see some aggressive action on, because that's a critical mineral that we have an abundance of, but some really world-class major projects that can move the needle have been just hamstrung by permitting and environmental regulations. I think that's probably going to, the rails would be greased for those projects. Although even just the permitting of a lot of those projects will take longer than the remaining time in Trump's administration. So it could get started now, but I think you'd need another Republican of Trump's ilk in the White House to keep that really moving.
Yeah, definitely. Definitely someone that's willing to go against the grain and be disruptive, and so and probably not care, and I guess and have some thick skin too.
Yeah, and I think we have some ideas who that might be, but
yeah, for sure. So along these lines, there's a lot of talk about a debasement trade. And so the debasement trade historically was when obviously countries would start to chip off pieces of coins or add, other base metals to gold and silver and keep the same face value, but diminish the content, the gold and silver content that was in the coins. Now this looks like printing more money. And so a lot of headlines have been coming out about the debasement trade, that more dollars are going to be printed, and they're going to lose more in purchasing power, get into real assets such as gold, silver, et cetera, et cetera. And so just thinking about this trade, I kind of wonder, should there be any effort to try to save the dollar by the U.S. Politicians or anything of that nature? Are we past beyond that point to where like it's just no hope for the dollar? Just want to get your perspective there, because this debasement trade is actually drawing in a lot of capital into the metals.
yeah, it seems like the one thing that was lacking for gold in the financial marketplace was marketing. Was an easy theme, some kind of a label on it like you had for AI and for crypto and everything else. And now this debasement trade moniker and brand has been thrown onto gold and associated or like investments, and it's really catching on. But that debasement trade, to my mind, is an extension of what I talked about before. If you have 4.5 decades of ever easier money and ever greater debts, you get to the point where the debt load has grown so large that it can't be managed at what was normal interest rates. Normal interest rates are 5-6%. Throughout human history, that's been the natural interest rate, around 5 or 6%. So what we went through over the last, almost 20 years now, has been completely abnormal and literally zeroed zeroed interest rates, zero bound interest rates has not been normal. So now what happens is the debt load has grown so large during a period of ever easier money that interest rates can't rise at a faster rate, or the interest rate can't be higher than the rate of depreciation of the underlying currency. So in effect, that currency has to cheapen as quickly or quicker than the rate that you're paying on the debt, which means that, that rate of depreciation is the rate of inflation. So interest rates have to be lower than the rate of inflation. They have to be negative in real terms. And that's the real debasement trade, the reality that debt loads are too large to have interest rates at levels that are above the rate of inflation. Negative real rates are tremendously bullish for things as opposed to financial assets. It's extremely bullish for the monetary metals of gold and silver, but commodities in general, tangible assets, real estate, that environment is bullish for all of those. So there are some people out there that are disparaging the debasement trade by saying, well, why has the bond market been so good recently with the long term, with the 10-year yield actually falling? Well, I think that's really a recognition by the market that we're going to have lower rates, or an attempt to have lower rates by the Fed. You won't have rising rates in the face of that ongoing dollar depreciation until the market senses that the Fed is not in control of interest rates, until you see the bond vigilantes come out and start demanding higher yields. We will get to that point. We're just not there yet. The market right now and over the past few months has been pricing in the new reality of a new easing cycle, a new rate cutting cycle that will extend easily for the next year or so, because we've got a few more rate cuts in the Powell regime, and then next May we have Trump's man in Powell's seat, and you can bet that they're going to be lowering rates very aggressively at that point. So the bond market, I think, is simply just pricing that in right now.
Got it. Yeah, thanks for that thorough explanation.
Timing is everything in this business. We've seen commodity prices really move up. The copper price, that started to move up strongly. We're not far off all-time highs, although you wouldn't know it from the junior sector and copper companies in general. But I think over the next year or two, we're going to see that really correct to the upside, and you're going to see a lot of money come into the sectors. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
Yeah, because I've been thinking about, in terms of like more capital is being spent on these. I mean, you have the race, the AI race, the tech race between U.S. and China. You have obviously the need for these critical minerals, and these sectors haven't been invested in, at least by the government, in a long time, and such. And so, there's obviously more capital and more easing of regulations that needs to happen in these areas. So definitely, I could see the government spending more money, to help fund these areas. And then that's not even to mention the entitlements and all of that. That's like political suicide for any politician to touch. So I do want to cover just the sentiment in the gold equities, okay, and just really get your perspective on where we're at in the cycle. I mean, gold prices moved up significantly very fast. Some of these junior mining companies or junior exploration companies have multi-bagger gains and such. And even for me, talking with Rick Rule, he said he could sell, 20, I think it was 25% of his portfolio and get all his initial investment back and just let the profits ride. So there's a lot of talk about de-risking, and I do want to get your perspective on, whenever investors are de-risking, what do you de-risk to? Especially if you have a long-term view on the gold market. Someone like Rick is de-risking into like wheat and precious metals, some of the big top tier companies and such. And so I want to get your perspective on de-risking. Are you doing that? Are you selling or are you holding? Just kind of how are you navigating this bull market?
Yeah, that's the trickiest question of all. And that's where, as I mentioned at the start, there's stress in every market and worries in every market. These are the kinds of concerns we want to have. What do you sell? How do you sell? When do you sell? What do you do with the money once you sell? I think that, profits, it's important to state that taking profits is never a bad idea. If you can take paper gains and turn them into reality in this kind of a market, you should do that. What you do with that money, whether you rotate it into an undervalued sector like energy, whether you rotate it into the stronger names in the sector like Franco-Nevada and the like, or whether you put it into gold in silver bullion. Or one of the things that I've done in past bull market situations like this, like the 2000s, that I think is more important as you get a little bit more advanced in the bull market, is you take money completely out of the market. You don't leave it in cash you don't sell a position, leave that cash sitting in your brokerage account, because then you're going to plow it into the next new name, a new story that comes up. Take it out of the market, make it so there's at least a couple of steps you have to take to get that money back into your brokerage account and back into a junior play. Then put that into, real estate or a bullion or something that's relatively safe and secure. I don't think we're at that stage yet. The importance of taking profits when a market gets overheated, and I do think the mining stocks are overheated right now, is balanced against the fact that we are still undervalued. And these mining stocks that have doubled and tripled, and the juniors in particular, are still long-term undervalued. So I've looked at my portfolio and tried very hard to take some profits and take some money off the table. But I look at each position in turn, and I feel like that is going to be selling for a lot more in a year or 2 years down the road. I've got some what I think are really good companies in my personal portfolio, so I'm very confident that they're going to be trading at much higher prices down the road, as long as the gold price is over, something like $3,000, which sounds, dramatic now, but it's $1,000 in the rearview mirror. So I think in this kind of environment, they're all going to be trading higher. You have to sell to your point, as Rick says, your point of no concern. Whatever helps you to sleep at night, take that money off the table. Realize those profits, and maybe take a break if it's really stressing you out, and see what happens. But we are going to have a correction in the near to intermediate term in the mining stocks. I don't think we're going to have a significant correction in gold, because whoever's buying gold right now is not price sensitive, and they're buying it programmatically, just money going into the market on a regular basis, and they just don't care. So I don't know that juggernaut can be derailed anytime soon, but the mining stocks and even silver, although silver is a special case of all the supply issues right now, but mining stocks in particular are still driven by humans making investment decisions. So the ebb and flow of sentiment will still have an effect there, and that's why I think we're probably going to have a correction, at some point in the near term. So just be careful what you sell is I guess my bottom line, because you're probably not going to buy it back at lower levels.
Mm-hmm. Okay, so I just want to get your perspective on a near-term correction. There could also be like a near-term correction, consolidation, or something? I mean, the price just moved up significantly higher. I'm sure the RSI is looking frothy. So just thinking about, okay, we have Morgan Stanley's chief investment officer come out and say 60, 2020, 20% gold. And then the World Gold Council reported that in the last month, gold ETF inflows hit a record, which was over $17 billion. And so it seems like there's still a lot of people that aren't into the market yet. And so it seems like we haven't hit those euphoric levels or highs yet. But, I'm still trying to still trying to process all of that. And so when you hear like record inflows into gold ETFs of 17 billion in 1 month, what's kind of your perspective there? Do you think that's a signal of frothiness, or people are just behind the eight ball and they're trying to catch up?
Probably a little bit of both, or a lot of both. I do think, though, it is a sign of frothiness to some degree, because the bullion ETFs are they used to be a stickier investment. It's been a proxy for Western investment, but it used to be somewhat stickier than, say, the futures market and the like. That there were traders that would be involved, but they held on a bit more than they would if they were just buying in options and futures. I think it's not quite as sticky anymore. I think it's an easy way to play what is perceived to be as a momentum move or momentum trade in gold right now. So that's why I think those flows are going in, because it's a liquid way to have exposure to precious metals without storage fees, etc. And it's a way to get out. You can get out very easily. So I wouldn't look at that as being nearly as sticky as it has been in the past. What's interesting to me is that while the GLD ETF, the physical bullion ETF, is getting dramatic inflows, the GDX, the gold mining stock index ETF, is getting outflows. It's about flat right very recently, but has been getting very significant outflows over the past few months. To me, that doesn't say that Western investors and traders aren't playing the mining stocks. I think it tells me that they're playing those stocks individually rather than the ETF. They're getting elbows deep into this market and really looking at the names and being very active investors, because even though the inflows into GDX have been low or negative, the value of GDX has been rising as the values of these individual names have been rising. So I think that's really a sign of how the Western investors are playing it, and it seems to be that they're very, very active and involved in the sector.
Mm-hmm. Yeah, for sure. So with a huge institution, Morgan Stanley coming out saying 20% to gold, BlackRock mentioned gold being favorable in a rate cutting cycle. You have Goldman Sachs and JP Morgan with these high targets on the price of gold for next year. Do you see there being more investment demand from pensions and of the like? I'm just kind of wondering on that front, because when I think about pensions, those are huge funds tied to people's retirement accounts and such, and sometimes they're invested in these bonds that don't really pay anything, and I do remember seeing some articles of some pension funds transitioning to holding some form of gold or whatnot. And so I'm kind of wondering if that's in the cards, in the near future.
Yeah, absolutely, that and more. I think we're seeing, I put it the other day on X, that gold has transitioned or is evolving from the tinfoil asset to the TINA asset. There is no alternative, and you have to have it in your portfolio. You have to have it represented in your portfolio. It's a longer and more complicated story, but gold's performance over the last 10 15, 20, even 25 years has been so exemplary that all of the backward-looking models, all of the modern portfolio theory analyses, searching for that efficient frontier of the greatest risk-adjusted return, have been favoring gold more and more, because gold has not only somewhat contracyclical to other assets, therefore improving your risk. But it's also been outperforming other assets, so you've got the return part. So I'm not sure what that analysis shows. For decades, it was showing a 5% allocation was optimal in gold for risk-adjusted return. I would not be surprised if it's at 20% right now, as we're seeing some of these more mainstream analysts saying. So that makes gold respectable. It makes gold really more than respectable. It makes it a prudent and component of a balanced portfolio that if you don't follow these guidances, if you don't follow the data and have it in your portfolio, then you're not being responsible as a fiduciary. So yeah, that means you're going to get that pension money flowing into the metal. We're also seeing some of the hotter money out there flowing into the metal. We're seeing, we had that Tether investment in the EMX Elemental merger of $100 million. That was a drop in the bucket for Tether and for the tech sector. But I think it was the first step in getting a lot of that money into the sector, and a bunch of it is coming in. The financings we're seeing right now are of such a level. I mean, the new $10 million financing is $100 million financing. We've seen a number of those over just the past few weeks. That's more money than has been available within the mining sector. So that's outside money coming into the sector very quickly. And it's starting with the better names, bigger names, and it's going to be working. It really has already worked its way down the food chain. So we're just seeing the first signs of that trend that you're talking about, and I think it's going to continue. There's so much money out there in these other markets, these other capital pools that we're not used to seeing.
Mm-hmm. Yeah, for sure. So what's your projection, or what's your outlook as we are in earnings season? We had big banks come out and report some major gains in earnings, and so obviously we have many gold companies that are going to be reporting earnings and such, and so I want to get your perspective there.
Yeah, it's going to be amazing. The numbers are going to be eye-popping. We've had really very high gold prices for the entirety of this quarter, so they're just getting better and better. And it will illustrate, I think, that the major miners are still significantly undervalued on price to earnings bases and price to NAV and the like. Despite these moves where they've doubled or tripled, even the majors have doubled or tripled, you're going to see that by all the standard metrics that Wall Street likes to use, they're dramatically undervalued. The last quarter we saw that Newmont had, I believe, triple the earnings of Tesla, and I think it was 1/13 the market cap. Those kinds of disparities can be extended for a long time, but they don't last forever. And I think Wall Street is looking at that, and we'll look at that in these next quarterly reports and see that the situation has gotten even more stretched and more dramatic. And investors and institutional investors cannot ignore these levels of earnings, and I think that's going to be a big catalyst coming up for the big miners and the sector at large.
Yeah, it's kind of interesting. Like with gold being so unique, we can look at gold's price in dollars, and we can see over the past 3 months it's been staying elevated, and then you look at producers that are selling the gold and whatnot, being able to capitalize on that increase in the price. And so it'd be interesting to see how, this quarter plays out. I mean, we're already, over 4,200 and such, and seeing how this quarter plays out. And then you can almost like forward look like, okay, well, a Newmont or Agnico Eagle or whatnot, they may blow earnings out the water again, because of how our gold has been performing. So it's kind of interesting how you can almost like foretell some of the earnings just based on looking at the price of the metal.
Yeah, it is. And having energy prices, having oil prices, which is the biggest cost component for the miners, remaining muted throughout this gold bull market has been just, an accelerant on the fire. So margins have expanded from both directions, from costs, the major cost input being stagnant, and the price of their product soaring in value. We sit here and we're so stunned by this move in the metals, but the smart investors among us are looking at the earnings coming up and saying this is going to be another catalyst for another leg up, and are getting positioned for that right now. And I think that's a really smart move.
Yeah, for sure. So I do want to cover silver, touch on silver before we touch on the investment conference and some of the amazing guests that you're bringing out and such. So what's your overall take on silver? I mean, we're above 52 an ounce, and it's been hovering between 50 and a little over 52 and such. So what's your overall outlook on silver and where we're at in that cycle?
Yeah, uncharted territory for silver now that we're rising above that $50 target that everybody knew that it was headed toward, since it broke through $35. So from this point, I think we look to history and we realize that silver can go up a multiple from here. Its inflation adjusted level is closer to $200 an ounce than it is to 50. So it can go a long way. It has lagged. It has not, historically silver has outperformed gold. And historically, this gets forgotten. It's actually been a predictive element for gold, that the silver price would actually move along with mining stocks before the gold price, as the market kind of sniffed out that a gold price rise was in the offing. It's been reversed completely in this bull market, in that gold has moved first and substantially before silver and the mining stocks, the traditional levers to gold, before they even moved. Now they're playing catch up. So silver's move has been stunning. It has been outperforming gold as it's supposed to, but I think it's got a lot more to go. The industrial usage of silver is something that I've really discounted for decades. It's typically been used merely as a stick for the market to beat silver over the head with, and that if there's any sign of an economic slowdown, then they sell silver like another commodity instead of the monetary metal that it is. And most of its value is contained in its monetary cachet. All that said, within the next few years, the next 5 years or so, industrial demand will grow to the point that it's going to take up every single ounce of new production. And because the market overall is in a deficit, we're already going to have much, if not all, of the above ground supplies depleted by that point. So it is got a long way to go, and I think what we're seeing right now is, obviously the effect of the supply problems in London, where silver is trying to get to London to fulfill the demand, the paper demand, the EFP demand in London, and there's just not any silver there. So the shorts can't deliver, so they're having to cover. So there's a silver squeeze going on right now, but I think that silver squeeze is just, a small part, a microcosm of the bigger story at play for the metal.
Mm-hmm. Yeah, so I kind of wonder what are these folks like? What does it look like when they're scrambling to try to get this physical silver? and they don't have it to like cover their positions and such. And so it's kind of interesting just thinking like, what are they doing? What are they talking about?
Yeah, well, what it looks like is something that you don't want to be in their, in their shoes. It looks like a 1, 2, 3, 4% gains on a daily basis in silver. It looks like today, basically,
Yeah,
is what it looks like.
yeah, for sure, for sure. So let's talk about the conference. So conference is coming up here on November 2nd. And you got some amazing guests coming out. And I want to just talk about who you have coming out. Also, just what are your expectations this year? I mean, I was at the New Orleans Investment Conference. It was two years ago in 2023. I didn't make it last year, but I'm excited to be there this year. And so I'm sure the sentiment is going to be off the charts.
Yeah, judging from our registrations and our exhibitor sales, it is pretty much off the charts. This year's event is going to be bursting at the seams with excitement and opportunity. Our exhibit hall is going to be filled with really smart companies who have exciting stories, especially in this environment, to tell our attendees. We're going to have hundreds and hundreds of really smart, successful investors in the space who are willing to share their best ideas. I tell people that lifelong friends and life-changing profits are made at the New Orleans Investment Conference, really in any market environment, but in a market environment like this, in a metals and mining bull market, it's someplace you really have to be, or you're just going to cheat yourself. And as usual, and really not even as usual, our speaker roster is renowned as being the tops in the industry every year, but I really think we hit it out of the ballpark this year. There are only 2 people that I can think of that I wanted to get to participate that weren't able to because of conflicts. So I really encourage people to go to our website and look at the speaker roster, because you're not going to see anything like it anywhere else. These are all people that are the smartest out there today. They present well-reasoned arguments. They do not all present the same argument, and they're not all singing from the same song sheet. So you're going to get some conflicting views, which is, I think, vitally important for people to make intelligent investment decisions. But these are the best of the best that you'll find anywhere, and we have dozens and dozens and dozens of them. So. Nothing like it anywhere else. I would urge people, though, to act now. As we speak, the price is going to rise in a week, and our room block is about to sell out. So I would really encourage people to act immediately to secure their place. You don't want to miss this. You really don't. Not in this kind of market environment.
Yeah, agreed. And being there in 2023 and even attending VRIC Symposium in 2023, and being there this year, it's a lot more people. But then even since then, like the gold and silver price has ran up dramatically. So I'm expecting that there's going to be a lot more people and a lot more action as well, compared to when I was there last time. So I'm excited.
There will be. And, I think it's important for people to realize that every year at this event, many, if not most, of the biggest winners in the mining sector of the following year are right there in our exhibit hall telling their stories. So if you make it through this exhibit hall and listen to every story, and you do your homework, you're very likely going to find mining stocks, junior mining stocks, that are going to multiply in price over the next year. You cannot let an opportunity like that pass you by.
Yeah, for sure. And I think it's also worth noting that people are getting exclusive information as well. Many of the speakers they're coming, they're not telling the same stories that they're telling on the interviews. I mean, it's not it doesn't contradict what they're saying on the interviews, but they're getting paid, to come and share some top-notch information, new research, new developments, things of that nature. I mean, being in the environment, you hear about companies and deals being made where you're like, oh, I didn't even know that happened, and before they even hit news headlines and such. And so there's a lot of opportunity to be gained from this.
Yeah, there is. I mean, you'll get specific stock recommendations from the podium from our speakers, but you also, our speakers in those recommendations, many of them say their best picks for the New Orleans conference. They want to be able to be known as one of the people who gave some of the biggest winners of the previous year. So we've had that reputation for decades. But you do get to meet these speakers, and they do say things that they won't say in public. The companies, you get to look at the management teams face to face. Not only ask them what their plans are, but ask them, what their plans are if things go wrong, and what's the downside, what's the upside, and see if they're being honest with you. And smart companies, I'm famous for saying that smart companies do smart things. And if a company comes to the New Orleans Investment Conference, where the top investors in the sector gather every year, that alone is a sign that this company is smart, intelligent, that management team knows how to get their story out there. And then you get to listen to the story and gauge the seriousness and the expertise and the potential of that management team and their projects. So there's really nowhere else that you can get all of that in one place at one time, and everything's recorded. You get to enjoy yourself, take your notes, but you can go back home and replay and see anything you missed from workshops to general session presentations, and do more due diligence. It is a tremendous opportunity.
Mm-hmm. So I'm gonna let you know my favorite memory from 2023. It was cool to be a fly on the wall. So I was walking the exhibitor hall, and I run into Peter Schiff grilling one of the companies about how are they offering yield on their gold and such. And the company was actually hanging in that argument really well with Peter Schiff. And so just seeing these brilliant minds go back and forth, and I'm just sitting there just watching like, dang, that's a good point. That's a good point. And this person's putting up a good argument. So it was pretty cool just seeing that in real time, at the conference.
Yeah, it's hard to keep up with Peter. Peter's stream of consciousness arguments are a wonder to behold. And what happens is, I talk to people how the green room before speakers go on stage is a remarkable place to be, but that spills over into the actual event, and you have that chance to talk with these speakers at speaker tables, walking in the halls. You get to mingle with them at our social events. It is the kind of, we try to make that available to the attendees, because our whole business model is really simple. Just provide the maximum amount of value that you can, more value than people would ever imagine that they could get, and they'll keep coming. So that's what we do every year, and this year's, I think, is going to be really special, not just because of the market, but because our speaker lineup is really exciting, and I have some new names this year that I'm very excited about.
Yeah, for sure. Well, you all be sure to click that link that is in the description, that is pinned in the comments, to the New Orleans Investment Conference. We'd love to see you there. Love to engage with you in person. Even if you can't join in person, you can join virtually and still get access to this exclusive information. So, Brien, appreciate you for coming on the show, and look forward to having you back sometime.
Darrell, always a pleasure to talk to you, and I look forward to standing next to you, elbow to elbow, at the gumbo station in our opening reception.
All right, sounds good. All right, take care.
Take care.